Yeah, hello guys, and welcome to another video. So in this video I'll be showing you how you can trade accumulators on the Deriv trader platform even if you're a beginner, and I will also share some risk management tips and how best to analyze accumulators before you place a trade. But before I dive into that, if you're new to my channel, do consider subscribing. Also click the bell icon beside it, that way you get notified anytime I upload any video. So with that being said, let's get right into the video. So first thing first, I'll be doing this presentation using my iPad. iPad has the same display if you're trading with a PC. For you to be able to trade accumulators on the Deriv trader platform, you need to first of all sign up a trading account. So if you already have a trading account, then you can go ahead and log into your trading account. But if you don't, then check on the description of this video. I dropped a link. So once you click on that link, it will take you to a page where you input your email address. Then you go ahead and verify it through the code they will send to the email address you provided. So from there, you complete the setup. Once you complete the setup, once you go ahead and log into your Deriv account to this page you're seeing on your screen. And on the Traders Hub, you need to make sure that it is on demo. If you're new to the Deriv trader platform, then you should know that if you want to trade on the demo, what you just need to drop this button right here and select demo. And if you want to trade on the real account, then you need to drop down this button again and click on the real account. Okay, but if you just signed up an account and it's not a real account and it's a demo account, then it is best you practice on a demo first before trading on your real account. So anytime you're ready to trade live, what you just need to do is just to create a real account and make sure that the options is highlighted here. Is not CFD. Don't highlight the CFD. So if the CFD is highlighted, then you click on the options. Then you go ahead and click the open button beside the Deriv trader right here. It is on the Deriv trader platform that you can find accumulators. So I'll click on it. And just in case you click on the Deriv trader platform and it doesn't automatically take you to the accumulator trading page, then what you just need to do is to come here and change the trade type. It is here that you change the trade type. Once you click on it, this pop-up will appear. Then you look for accumulators and select. So these accumulators right here, you select accumulators. Automatically, you are on the accumulator page. The first thing you need to do is to select the asset you want to trade, right? So you come here to select the asset you want to trade, then come here and drop down this button right here. You see a list of assets that you can trade. So I'll be going for volatility 10 index. Okay. So before I continue, let me explain how the accumulator works. If you look at the chart, you notice that there are two lines following the price. Immediately the price moves, then the two line moves to take. This is actually a price range. Accumulators are high payout contracts offered by Deriv, and it allows you to accumulate profit over time as long as price remains within the range. These two lines here are one above the current price and one below the current price. This is the price range. Each tick or each price movement that stays within the range without breaking outside the range, you earn a percentage. Your profit grows based on the percentage growth you selected. On the growth rate, somewhere here, you see that we have 1%, we have 2%, we have 3%, we have 4%, and the max is actually 5%. This means that if you stake $100 on a single trade and the price stays within the range, each tick gives you 5% of your investment. 10 ticks for a $100 investment with a 5% growth rate will give you actually $50 once the price remains within this price range. Currently, price is moving within the range. So price just broke out of the range. As you can see, it turned red. It means that price broke out of the range if we have selected the growth rate of 5%. And down here is where you impute the amount you want to risk per trade. This is where you set your take profit. If you invest $100 on a single trade and your take profit is $100, once your profit accumulates to $100, your trade will automatically close. If you must trade accumulators, this is how you should analyze. First, you must make sure that the price is on a range. Whatever asset you're trading that is not on a strong trend, all right? Don't just trade accumulators blindly. Don't just trade because you want to trade. And another way you should analyze is to check the stats. Below here is the stats. Then click on this arrow right here. Once you click on this arrow, this stats will show. And one thing you should also understand is this differs based on the percentage growth you selected. So this is actually 5% growth, give us these stats. This is the stats for 5% growth rate. And if we go back and select 4% growth rate and we check the stats, you see that it is different, right? The numbers are different. I will explain what the numbers represent later. And if you go and select the 1% growth rate and check the stats, you see that also the numbers are what? Different. Now, what does this number mean? It means the number of ticks price stayed within the price range before it broke out. For a growth rate of 1%, as you can, if you go back, you see that we're on 1%. Then when we check the stat, you see that currently, you see that price have ticked 136 times within the range without breaking outside the range. So if a tick is giving you $1, currently you should be making $142, as you can see on your screen. Once ticks move outside the price range, another number will start reading. As you can see previously, the price moved 146 tick before it moved out of the range. This is what each number here represents. This start is where you do analysis. So if you want to trade, you should come here and look at how price is what performing. Okay, now let's check the stats of another growth rate. Okay, so this is, let's go for 3% growth rate, and now let's check the stats. Okay, this is the stats. You notice that the number of ticks price stayed within the range on a 3% growth rate is lesser than that of a 1% growth rate. This implies that the higher the growth rate you select, the lower price tends to stay within the range before it breaks out. So before you choose any growth rate you want to trade on accumulators, make sure you come to the start and backtest your strategy. Whatever strategy you intend to use, make sure you backtest it based on the stats. So if you try a 5% growth rate and it's not working with your strategy, try a 3% growth rate. If you try a 3% growth rate, it's not working with your strategy, you can try a 1% growth rate. Here, price moved 49 ticks within the price range for a 3% growth rate before it break out of the range. Currently, price has moved 48. As you can see, the number is still increasing. 50 is 50, has moved 50 ticks within the range for a 3% growth rate. And anytime the market is extremely volatile, you see that it will be making higher numbers. Okay, it will be making lower numbers, just like what happened here. This is 7%. After 7 ticks, it move out of the range. Then after 8 ticks, it move out of the range. After 16 ticks, it move out of the range. After 8 ticks, it move out of the range. You find out that during this time, market was really volatile. And if you analyze it on your chart, you see that price was either on a serious trend. When the price is consolidating on the lowest time frame, that is the right time to trade accumulators. And one thing you should also know is no trading strategy can give you 100% win rate. With good strategy and good risk management approach, then you can actually make more profit than your losses. What makes you a good trader is your ability to trade in a way that your profit will exceed your losses. And some risk management tips you should adopt is never risk more than 2% of your trading balance. And secondly, do not over trade. The worst mistake you can do is to over trade, because the market can start trending at any time. And thirdly, try a reasonable risk to reward ratio. If you want to set your take profit, make sure that the profit you're targeting is at least has a risk reward ratio of 1:1. So if you're risking $1, target to make $1. If you're risking $5, target to make $5 on a single trade. So whichever strategy you're using, make sure you backtest it on the start to see if actually you will have more profit than losses. So for instance, if I select a growth rate of 5%, okay, let's say I want to risk $5. and my take profit is what? $5. For me to actually make $5, if I stake $5 with a growth rate of 5%, I'm expecting the price to make 20 ticks within the range without breaking out of the range. So before you place any trade, you need to first of all check the stats, how price is moving. Is price moving above 20 ticks currently? As you can see, the number of ticks price stays within the range before it breaks out is not up to 20. So if you check the last 5 trades, you see that the ticks were not up to 20. So this is not the right time to trade. You have to wait till price starts making 20 ticks and above within the range before you start entering the trade. So currently price have moved 21 ticks and is still within the range. So let's see how it goes. The price have made 34 ticks. This is the right time one can trade. My balance is $4,700. So once you break out of range, I'll enter buy. Then it will start counting. So I've already set my take profit to be the same amount I'm risking. So I'm just waiting for price to break out of range. And as you already know, once price break out of range, the 2 lines will turn red. So currently, I have made 72 ticks within the range. Okay, as you can see, price moved outside the range and I've entered the trade. Once you enter the trade, it will start counting. This 2 ticks, 3 ticks is still within the range. I've made 10 ticks, this is 11 ticks. So once it's 20 ticks, the trade is going to close because I take profit of what? 20 ticks. I've made $5, which is this. So I've just made $5. When you go back, you see the entry here on the chart. This is where it closed, and currently I have $4,705 on my real account. Risk reward ratio is extremely important for trading accumulators. These accumulators is very easy to understand. It's not difficult. All right, develop a good trading plan. If you have a good trading plan, you can actually profit trading accumulators. Know when you should enter the market. Don't just enter because you feel like the market is moving, you want to enter, right? So that will be all for this video, guys. If this video was helpful, don't forget to like, comment, and also subscribe to the channel if you're new. Talk to you on my next video.